Have you been paying attention to the crypto market lately? It's no secret that 2022 has been a rough year for the industry, with numerous implosions and setbacks. But despite all of this, the question on everyone's mind is crypto dead? The short answer is no, definitely not. While it's true that many projects have struggled and faced challenges, the idea that the entire cryptocurrency sector will implode is absurd. In fact, there are many reasons why the blockchain and crypto space will continue to develop and thrive. One of the biggest reasons is the global reach of Bitcoin and other major cryptos. When Bitcoin first hit the market almost 15 years ago, very few people could have predicted its rise to becoming a globally recognized reserve asset, accepted for retail payments and used for cross-border trade. And the value of Bitcoin and other cryptos is not tied to any specific price level. Their utility remains the same, whether the price is $5,000 or $50,000. So while it may not be the right time to load up on cryptos blindly, it's definitely a good time to be cautiously optimistic about the industry's future. What do you think about the current state of the crypto market? Let us know in the comments below. It's no secret that crypto has its fair share of detractors in the mainstream investment world. Just look at the comments from legendary investor Charlie Munger, who has famously said that he hates the success of Bitcoin and doesn't welcome a currency that's so useful to kidnappers and extortionists. But the truth is, many of these crypto bears just don't understand the technology. They may have valid points about the industry's risks and challenges, but they often fail to see the value in decentralized blockchains and the benefits they offer to users. Take, for example, the issue of transparency. While it's true that the public can view Bitcoin transactions, the same can't be said for all fiat currency transactions. As we saw with the $1.7 billion in cash sent by President Obama to Iran, it can be difficult to trace the movement of traditional money. With crypto, on the other hand, every transaction can be traced and accounted for on the blockchain. So while it's important to be aware of the risks and challenges facing the crypto industry, it's also important to see the value of decentralized blockchains and their potential to revolutionize how we think about money and financial transactions. Have you been following the crypto market lately? One of the big stories this year has been the collapse of FTX, which has many people wondering about the industry's future. But if you look deeper, you'll see that the failure of FTX is a good example of why crypto will continue to grow and thrive. How so? It all comes down to the involvement of institutional investors. Big names like BlackRock, the Ontario Pension Fund, Sequoia, and Tiger Global have all put significant amounts of money into FTX and other crypto projects. These sophisticated, high-powered investors see serious potential in the crypto market. And they're not alone. Companies like PayPal, VanEck, SoftBank, and Temasek are also getting in on the action. When PayPal began allowing some of its clients to hold and use cryptos in 2020, the price of Bitcoin skyrocketed from around $10,000 to over $50,000 in just 6 months. So while it's natural for retail investors to feel fear and doubt in a bear market, institutional traders see things differently. They're not backing off from crypto, and their involvement in the market has serious implications for the industry's future. What do you think about the role of institutional investors in the crypto market? Let us know in the comments below. Have you kept up with the latest developments in central bank digital currencies, or CBDCs? Almost every major nation is either launching or researching its own version of a CBDC, and the implications of this trend are huge. Unlike cryptocurrencies like Bitcoin or Ethereum, CBDCs are almost universally supported by the financial elite. Ex-Fed head and current U.S. Treasury Secretary Janet Yellen has said that the U.S. needs to consider the role that a public CBDC would play in the global economy. U.S. President Joe Biden has issued an executive order stating that the U.S. must reinforce the United States leadership in the global financial system and technological and economic competitiveness, including through the responsible development of payment innovations and digital assets. It's clear that the U.S. and the West generally don't want to fall behind in the race to popularize CBDCs. Every major nation is likely to make similar statements, and there will likely be a CBDC race to see who can make their digital currency the most widely used. So don't be fooled. CBDCs are the next big thing, and they're not going away anytime soon. How do you think CBDCs will impact the financial world? Let us know in the comments. But despite all of this, it's important to remember that the value of cryptocurrency doesn't come from centralized service providers. It comes from the fact that it operates without the need for centralized authorities. In fact, investment bank JP Morgan has pointed out that no major blockchain has failed, even in the midst of tough market conditions. It's the centralized players like FTX that have struggled. And while it's true that the adoption and use of cryptos are still limited compared to traditional assets, it's important to remember that the market is still very new. There's plenty of room for growth and development. Just look at JP Morgan CEO Jamie Dimon, who was once extremely critical of Bitcoin and the crypto space. Now, the bank is introducing its own crypto wallet. This shows just how much the market can change in a short amount of time. Like any market, there are boom and bust cycles in crypto. We're currently in a bust cycle, but that doesn't mean the industry's dead. In fact, many experts believe that the market is poised for growth in the coming years. The recent DeFi and NFT manias are just two examples of the potential for long-term value in the crypto market. So don't get caught up in the hype, and always be careful when investing in crypto. Look for long-term value, and remember that, like spring following winter, the crypto market will likely increase in the coming years. What do you think the future holds for the crypto market? Let us know in the comments. And don't forget to like, comment, and subscribe to stay up to date on all things crypto.